Hey guys and girls, hope everyone's doing well and welcome to the Trading Fields YouTube channel. My name is Matt. You can see my Instagram right there at Spiritual Trader, spiritual.trader, and my business partner Yasser, his Instagram there is yt.fx. So please feel free to give us a follow and make sure you are subscribed to our channel because moving forward, there's going to be a lot more videos produced on a regular basis. We're going to be providing as much value as possible to show you what is happening inside the trading field in terms of the signals, in terms of the education, and giving you an insight into the way that we personally look at the market. So I'm going to kick off this series as such with the content today, which is going to be surrounding one of the trades that we placed earlier this week. So our groups that we've got are through Telegram. We've got our signals group. We've got a chat, which is our members group for our course members. And obviously we have our group for everyone that's in our beginners course, which is completely free as well. So feel free, if you want access to that, just send us a message on Instagram and we will help you get set up and started. So first of all, with the signal that we placed this week, okay, so what we had this week was we had a really nice position on USD CAD, okay, and I'm going to show you this for complete transparency so you can see exactly what's happening, wins, losses, etc., etc. On the 26th of April, around 4 p.m., that's Dubai time, we placed a position for long USD CAD with 11 risk. Now that 11 risk means 11 pip risk, okay, so it's different to some signal service providers you've seen in the past. We do have very, very tight stop losses because we are aiming for very strong risk rewards. And this trade in particular was 4.72 risk rewards with 52 pips taken. So if we can have a look at the actual position itself, we entered at 1.2742. 1.2753, sorry, with our stop loss 11 pips behind 1.2742 and our target 1.2805. Okay, so if I just jump onto USD CAD right now to show you guys exactly what we did, why we placed that position, where we placed it, etc., etc. Now, I'm not going to give away everything that I offer and I give to our course members, but I will give you an insight into my reasonings and my thought process behind actually placing these trades. Okay, so it was around 4 o'clock on the 26th, which is approximately at the closure of this 1 hour candle. Okay, the closure of this 1 hour candle. So first of all, just want to talk about this very specific 1 hour candle as to why I was happy to enter at this point. Okay, so our stop loss was around 11 pips. Okay, so roughly speaking around this point here. And entry is there, and our target 1.2805. Okay, 1.2805, which is approximately there. Okay, that's jumped up a little bit higher than I wanted it to, but approximately at that point there. Okay, so the first thing that I actually noticed on this market is, first of all, USD has been very, very bullish. So I'm more than happy to continue trading the trend whilst that USD is continuing to make higher highs and higher lows. Okay. Now this rejection down here was really nice. What we did is we spiked into the liquidity. Okay, that can be found beyond this region right here. Okay, and once we spiked into that region and we rejected it quite nicely, breaking structure to the upside, we consolidated for a bit, and that gave us the opportunity to see whether or not the buyers were going to continue to push this market into new highs. Okay, now the area that I was interested in seeing the market break away from was this one here, this candle here. Okay, let me just highlight that for you guys. So this candle right here. Okay, and as you can see, we consolidated and then we had a nice closure above. Okay, and as soon as that closure occurred, okay, what I did was I entered that position with a very, very tight stop loss, and I believe that stop loss was just below the 30-minute candle. Okay, just below the 30-minute candle, which is what I'm just about to load up for you guys now, if it wants to speed up a little bit. So yeah, it was just below that 30-minute candle. So that last 30-minute candle was here. We then closed, making a new 30-minute candle, and what we did is put our stop loss just a few pips, which was 42, a few pips below the below that candle, right? And as you can see, because we had that momentum and because we had that closure, okay, of breaking above that consolidation and proving the buyers were still in control, it was okay to have a very tight stop loss. Now, looking at this right now, I actually could have got away with having a 5 pip stop or even a 6 pip stop and actually doubling my risk reward as well. But we're not here to gamble, we're here to make solid decisions when placing trades, especially within our signal service. And as you can see, literally within the next 2 hours, 2.5 hours or so, we went straight through and smashed our target of 1.2805. Okay. As you can see here, 52 pips, 4.72 risk reward. Okay, so really, really nice position to start off the week. And this was our first trade of the week as well. So it was Tuesday at this point. Mondays are my least favorite days. I prefer to see the market wake up first. And obviously what I was doing mainly here was, after seeing this liquidity be tapped into and rejected from, and then seeing the break of structure and tests of previous supply and demand, what I wanted to see ideally, and this is roughly when we moved our stops to break even, is we waited for this market to reach the previous high. Okay. Markets move in very specific ways. They create higher highs and higher lows, higher highs and higher lows. Now, the main and only guaranteed move that you can get on a market, or not guaranteed, but almost guaranteed move, is actually picking out the market at a low whilst it's in an uptrend and taking it to the high, and vice versa. If you're looking at selling a market, picking the market up at a high and hoping to sell it down to the previous low. Anything that happens after that, okay, depends on the higher time frames. But it's very important to be safe when you're trading and ensure that what you do is you move stops to break even. You perhaps take some profits off, because above this level right here lies liquidity. Okay, and liquidity is the perfect area for banks and financial institutions to take off their positions, okay, to take profits from their positions or add new positions on. And what that does in turn is actually flips the market. Okay, so you need to be very, very careful around these levels and be safe. Okay, we don't have to be 100% right all the time, but it is important to just pay yourself and also make sure that you're protecting your positions as much as possible. I personally believe that the less time you spend in the market, the safer you will be. Okay, so guys, I hope you find this useful. Please make sure you give this video a like, comment if you found it useful, and if you've got any questions at all, feel free to message us. Our DMs are always open, and look forward to getting another video across to you in the coming days.